to our Federal Taxation 1, Chapter 7, Investments. So based in our textbook, we are actually covering our Chapter 7, Investments. And so this video is actually going to cover our tax form problem, which is comprehensive problem 7-63. So your tax forms problem is an algorithmic problem based on this one. So we're going to go over this problem and the solution so that way you are well equipped to complete your tax form problems. So during 2023, your clients, Mr. and Mrs. Howell, owned the following investment assets, as you see in this table. And note that no commissions are charged when no-load mutual funds are bought and sold. Then, because of the downturn in the stock market, Mr. and Mrs. Howell decided to sell most of their stocks and the mutual fund in 2023 and to reinvest in municipal bonds. So these are the investments that were sold in 2023, as you see here. The Howells broker issued them a Form 1099-B showing the sales proceeds net of the commissions paid. For example, the IBM sales proceeds were reported as $13,600 on their Form 1099-B. In addition to the sales reflected in the tables above here, they also, the Howells provided you with the following additional information around the tax year 2023. So the Howells received Form 1099-B from the Vanguard Mutual Fund reporting a $900 long-term capital gain distribution. That distribution was reinvested in 31 additional Vanguard Mutual Fund shares on June 30th, 2023. In 2017, Mrs. Howell loaned $6,000 to a friend who was starting a new multi-level marketing company that was called LD3. So that friend declared bankruptcy in 2023, and Mrs. Howell has been notified she will not be receiving the payment of that loan. So the Howells have a $2,300 short-term capital loss carryover and a $4,800 long-term capital loss carryover from prior years. The Howells did not instruct their broker to sell any particular lot of IBM stock, and the Howells earned $3,000 in municipal bond interest and $3,000 in interest from corporate bonds and $4,000 in qualified interest. Assume the Howells have $130,000 of wage income during the year. So for our tax form problems, we are only going to complete Part A and C. So for Part A, you are going to have to go get Form 8949 and Form 1040 Schedule D. These are actually in Connect for you. So you're going to use the Form 8949 and Part 1 of Schedule D to compute your net long-term and short-term capital gains. You're also going to complete Form 8949 even though the brokerage firm may have reported everything correctly and no adjustments are necessary. Then you're going to compute the Howells tax liability for the year. You're going to ignore the alternative minimum tax, AMT, and any phase-out provisions. Assuming they file a joint return, obviously the Howells have no dependents and they don't have any special tax elections, and their itemized deductions total $30,000. So you're going to assume the asset bases are reported to the IRS. For Part C, we're going to change our assumptions and we're going to assume that the Howells short-term capital loss carryover from prior years is $82,300, not the $2,300 that we were given above. So if that's the case, how much short-term and long-term capital loss carryovers remain to be carried beyond 2023 for future tax years? So this is the problem that we're working with. Again, in your Connect, the numbers might be differently. So now let's go and solve this problem so that you are successful in solving your tax form problems for investments. Our problem. So in Part A that we had to complete, we are looking to complete the Form 8949 and we're going to use the Schedule D. So let's scroll down to C. And again, the form will be in your Connect. So basically, you're going to complete the names on the return, and then you're going to show the Vanguard Mutual Fund, the proceeds, and the cost to get to our gain or loss, in this case, a gain of $100. Then you're going to show the non-business bad debt, that's $6,000 that was given to the friend that we're not going to get back. So we're going to total the two amounts for column D and E, and then we're going to have a $5,900 loss in this case. Then when we move to part 2 of the form, here we are going to show the IBM stock, the date acquired, the date sold, the proceeds, the cost or basis to get a gain of $3,150. Then we are going to show the 3,000 shares of Apple preferred stock. Similarly, the date acquired, sold, the proceeds, and the cost basis to show a gain of $71,100. And then we're going to show the $2,100 shares of Cisco Common, the date acquired, the date sold, the proceeds, and the cost basis to give us $9,550. Again, you're going to total column D and E because these are our long-term capital gains of $83,800. Then for Schedule D, you are going to show the $15,700 that we just completed and the cost to get to our $5,900, which is basically coming from this first page here. And then we are going to show, where is it? We're going to show then our second portion here, which is the $83,800 that we are showing from our long-term gains or losses. Then we are going to show the distribution here of $900, our long-term capital loss carry over, and then our net long-term gain or loss of $79,900. And basically then the Howells net capital gain is then included with their other income for the year in which we're going to calculate their final tax liability. So they made wages of $130,000. We have the interest income and the qualified dividends, which was all given to us in the problem. Then from our Schedule D, we have the $71,700 for net gain, and then which was basically our short-term capital loss of $8,200. And we're going to add to that the $79,900 of capital gains to get to the $71,700. That gives us an adjusted gross income of $208,700. Take away from that the itemized deductions because it is greater than the standard deduction of $27,700. So that leaves us a taxable income of $178,700. So their tax liability in turn would then be $24,630. And this is calculated where we're taking our ordinary income of $103,000, which is the $178,700 of taxable income minus the $71,700 up here, net long-term capital gains, because that's going to be taxed at 15%. And we're also going to deduct from that number $4,000 of qualified dividends, because that's also going to be taxed at 15%. And then the long-term capital gains and qualified dividends are taxed at 15% because the Howells taxable income falls between the 0 rate and the maximum of 15% rate. So then the tax on the $103,000 is $13,275, and the 15% tax on the long-term capital gains and qualified dividends of $75,000 is $11,355. So when we add that $13,275 plus the $11,355, we get a tax liability of $24,630. Then for our assignment, we're going to move on to Part C. So in this case, we were assuming that the short-term capital loss carryover was $82,300, not $2,300. So first, that net short-term capital loss for the year is going to now increase to the $88,200. And then when that is netted against the net long short-term capital gain for the year, which is $79,900, a net short-term capital loss for the year is $8,300. That's what's going to remain. So $3,000 of that loss can be reduced to ordinary income, and then the remaining $5,300 is a short-term capital loss carryover for future year. And that concludes our Chapter 7 Comprehensive Problem 63. So you can use this as a guide to complete your tax form problems. Thanks for watching.